Understanding and listening to what the people and the businesses in the countries where we invest is vital to our work. Over the past few years, we've been increasing the number of our staff that are based in Africa and Asia. And I'm delighted to be joined now by the two people who head up those teams. I'm joined by our head of Asia, Srini Nagarajan, and our head of Africa, Chris Chijiutomi, who can talk to us about how it feels in the places where we invest and how we've been getting on executing the first year of our new strategy. Welcome, Chris, Srini. Thanks for joining me.
Thanks, Lynsay.
Thank you, Lynsay.
Srini, I'm going to start off with you. After the difficulties of the pandemic and the serious toll it's taken on businesses and communities, I think we were all hoping for a slightly smoother 2022, but that hasn't always transpired. How's it felt from the the Asia region?
Thanks, Lynsay, for the opportunity, and good morning and good afternoon to people. Um, I'm first of all glad to say that BII plays a dominant role in Asia with its commitment to development impact and its relentless pursuit to be playing a role that is supportive to the private sector and mainly creation and preservation of jobs, which is very critical where we are today. Asia is a mixed bag. In South Asia, Indian economy bounced back after the pandemic. The surplus liquidity provided by the government and plus the pent-up demand helped the cause. India grew by around 6.2% in 22 and expected to grow by the same percentage in 23. The healthcare system did reasonably well, especially the challenges posed by the pandemic. The, the digitization mission in India continues relentlessly and has been a game changer in the country in trying to reduce the cost of services, really. However, on the macro side, erratic monsoons and resultant inflation are certainly a worry for us, really. From a BII standpoint, I wanted to mention two aspects that has been particularly exacerbated by COVID-19 and relevant for us. The first one is the income divide between the rich and the poor among societies have worsened post COVID-19, particularly the diminution of wealth of the bottom 50% of the population. And secondly, there is a clear need to improve women in labor force. And I think because the participation of women in formal labor force in India is close to 24% approximately, vis-a-vis countries like China, which is upwards of 40%. So there is a large section of the population that requires developmental capital from an inclusion perspective. That's precisely where we are focused besides sustainability. The rest of South Asia has been a slightly different picture because the rest of South Asia, the post pandemic recovery has been a little bit short lived as the sharp energy prices and commodity prices, also exacerbated by the war in Ukraine. And the political uncertainty in some countries, and politics and economics are linked to each other, and increased macroeconomic stress on both external and domestic fronts. We have witnessed devaluation in most markets, high level of inflation, which has affected a common man, continuing to and also leading to import restrictions and slower growth. Amongst all these countries are almost all these countries are in different stages with the IMF program, really. Of course, Bangladesh and Nepal have shown considerable resilience through these challenges and expected to recover than Pakistan sooner than Pakistan and Bangladesh. Pakistan, of course, signed most recently a staff level agreement with IMF. However, the extent of upcoming debt repayments will continue to stress the Pakistan's fragile FX situation, foreign exchange situation in the short to medium term. Finally, I think, look, for these economies to go back to the pre-COVID level, it will take some time. And once there is stability, the requirement for development capital from institutions like us is more prominent to crowd to is more prominent because given our ability to crowd in more foreign investors, and there is support needed to shore up the forex reserves. Lastly, in Southeast Asia, one sentence on that is that we have expanded in Southeast Asia more recently by opening an office in Singapore, which where I am headed, where I'm heading, with a climate ambition of investing up to 500 million pounds over the strategy cycle of 22-26. Here, the macros are relatively stable, but carbon emission is an issue, and hence our focus on climate change. Because fossil fuel remains a main source of energy and even exports from countries like Indonesia. So we will focus on the core energy transition theme in the Vietnam, Indonesia, and Philippine countries and make sure that our capital is much more complementary to mobilize the large capital available from the sovereign wealth funds and pension funds. I will conclude by saying that macro challenges are enormous. We have to navigate carefully to support this nation as a countercyclical investor. Let me stop there, Lynsay.
Lovely. Thanks, Srini. And Chris, how about Africa? Is it the same? Is it the same sort of mixed bag, or are you seeing something different on the continent?
Thanks, Lindsay, and good morning and good afternoon, all. Similar to Srini, I think Africa is a mixed bag, um, more in terms of adverse impact of, I guess, the slow recovery from the pandemic. I'd probably start by saying Africa actually, from a health perspective, did well during the pandemic. Some of the challenges from a health perspective seen more globally didn't really impact the population in Africa, largely because it's a younger population. But what I will say is 2022 has been not an easy year. It's been challenging and it's been full of complexity as you go through the different countries across Africa. I guess overarching, I would say the expected growth has been much slower than we all thought. If I look at the 2021 GDP growth figures, it was 4.8%. And the aspiration was 2022 was going to be an increase, recovery from COVID.
Mm.
The reality is at the end of 2022, it was actually 3.8%. So in real sense, then you'd say that's really been a driver of some of the issues we've seen. But if I dive in a bit deeper, so from a COVID perspective, the delay on and the impact from the global supply chain, Africa is still a net importer of goods and services. So as the cost of logistics has increased and the cost of raw material has increased, it's had an immediate and direct impact in terms of key African economies. Some of our portfolio companies that are delivering infrastructure projects, for example, in the continent, have suffered from increased prices of material for some of the transactions that we've been involved with. So we've seen a direct impact in terms of the issue around the global supply chain. I think the other key one, which I think is even more longer lasting, has been the impact of the Ukraine conflict. Impact really driven in two areas. One has been the increase on energy costs. A lot of the countries in Africa imports its energy in terms of fuel, both for power and also for industry. And then the second one is around food. Africa imports quite a substantial amount of wheat, both from Ukraine and also from Russia. So the increase in food prices has had an immediate effect on the average
Mm.
person in most of our countries. So I would say these, for me, have probably been two big drivers of some of the challenges why it's been quite a complex
Mm.
scenario across all of Africa. I think the other key ones, let me maybe touch on high inflationary environment. We've seen capital flow out of Africa to other more attractive destinations, especially for private capital. So that's led to increase in terms of currency devaluation in some of our key countries like Egypt, like
Mm.
Nigeria. We're starting to see similar things in Kenya. And I think some earlier speakers, Nick touched on it, Diana touched on it. We've had significant extreme weather issues across the continent. Southern Africa, halfway through last year, there was a lot of flooding. The flooding
Mm.
there, aside from kind of the cost of lives, but there was also cost to production, particularly in terms of the impact on the agriculture space in Southern Africa.
Mm.
In East Africa, we've seen issues basically around um, drought, drought in Tanzania, lack of
Mm.
rain in Kenya. This has then led to reduced exports for the agri sector in those countries. Reduced exports then means lack of forex, which
Mm.
then ultimately impacts the economy. So these are some of the challenges I've seen. A more recent one, which we saw the back end of 2022, in my engagement with governments in the Sahel region, has been the increased amount of insecurity, conflicts, and what that has then led to is more human migration from the Sahel. So from the
Mm.
government's perspective or the engagement on the private sector in those regions, they are asking for our type of capital. We're a counter-cyclical investor. We invest for the long term and we have patient capital. So the one thing I've
Mm.
seen across 2022 has been positive engagements from private sector in terms of looking to build and build on new partnerships with BII. I've also
Mhm.
seen engagements from government in terms of seeking our views around what are required to create the enabling environment for more capital flow
Mm.
into the region,
So,
ultimately linking back to the fact that job creation is seen as a big way where the continent can start to get itself out of the current challenge that's out there.
Yeah, and it's a real stabilizer, isn't it, at a time of instability too. I'll stay with you, Chris, just in terms of what's that meant for our investment activity over the last year? Has that changed at all, particularly because it's the first year of the strategy too?
Yeah, no, I think one way to look at some of the challenges is I think it's actually created for us, particularly thinking about impact-focused investment themes. It's created great opportunities for us. So let me
Mm.
speak to some of the key opportunities that I think it's created for us. So one common conversation that's occurred throughout 2022 is the impact of climate and the need for more climate finance across all our markets. So I've definitely seen a lot of activities and a lot of investment focus from us, but also from the countries in terms of their need for climate finance. Specific examples. So I was privileged enough to attend the Africa Cup in Egypt, which BII, alongside our shareholder, played a key role in terms of engaging with governments and key stakeholders about how we can deploy climate finance for where it's most needed. So some of the key things I've seen is we have an increased focus now in climate mitigation from the perspective of building more renewable infrastructure assets, especially in South Africa, where we are playing a key role with projects like the Kennard projects, where we are starting to become a key player in the energy transition of that particular country. So that's one key area where I'm starting to see a lot of activities. The other one from a mitigation and adaptation perspective is we in 2020 announced a key partnership in the water and sanitation space, AWID, Africa Water Infrastructure Development, which is a platform to help Africa with the underserved position it has with regards to water and sanitation. So I see some of these key areas in terms of the impact and the need for patient long-term capital, the climate crisis driven by some of the adverse weather condition. And this is now leading to us, especially when we think about our sustainability impact themes, for
Mm.
us to start investing some of our capital in these markets.
Right. And if I can come to you too, Srini, we've completed our first year of our new strategy. What sort of differences are you seeing in how we're approaching, and what sort of things are having the biggest impact across Asia?
Thanks, Lynsay. First of all, I must say our development impact methodology gets to the core of our problems in our markets. We have the most sophisticated methodology, and I think this is a great way to address. I mean, seeing our investments through the lens of our new development impact methodology helps us remain very disciplined and stick to our mission. So I must say, I'm very proud to say that BII has the most sophisticated development impact methodology. And really, it helps us to solve some of our development impact challenges in our markets. Energy transition, for example, is very critical. If you look at Asia on the climate-related issues, you, you know, economies can fall between two buckets. You cannot ask economies to stop fossil fuel abruptly, as this will affect their growth, nor economies can say we will postpone climate investments and let the other countries do the big adjustments and we'll catch up later, which is dominant in Asia. Both impractical ambition and lack of ambition can have imponderable consequences. So our new framework helps us focus on energy transition and adaptation rightly. Our shareholders, of course, are doing very effective work in JETP program in Indonesia and Vietnam, and we are very aligned with them in terms of our ambition in energy transition. Of course, in terms of the overall risk of our markets due to credit downgrades, which is similar to what Chris was mentioning in Africa, the demand for capital has increased given the environment greater scrutiny is required. That we are using the right investment instrument for solving immediate and strategic problems by partnering with the right sponsors in critical sectors. I think I think the overall pace of investment activity in countries like Nepal, Bangladesh, and India have remained quite resilient across this period, really. And so I'm proud to say that. The last point I just want to leave here is that some of our overall investments, I think the way we are driving our investments is through our themes of development impact. I think, in fact, deals are tools for us to achieve our development impact. really. And that's the way we look at transactions. And I think if you try and look deeper into into our various investments we have made, right from financial services till climate and the ITS sector, and it is addressing various problems like gender, climate, and inclusion, keeping one of our core themes. And I can go on with a number of investments which are helping us solve these development impact challenges in Asia.
Great. And very quickly, briefly, both of you, if I can ask you, just what are you excited about for the next 12 months? What do you think it's got in store? Chris, can I come to you first?
Yeah, no, so I remain very excited. I think difficult times, as we've seen, is creating big opportunities for us in terms of how our approach to investing can really help a lot of the countries in my region across Africa grow and sustain the current challenges. So some of the key themes that excites me is our approach to food security. I think the Ukraine war conflict has enabled a lot of countries to actually think internally in terms of how they can start to focus on food and agriculture across all the value chain. So I see BII playing a big role across all our suites of products, across all our various sectors, where from infrastructure through to food and agriculture, through to financial services, where we can actually play a role to support smallholder farmers. So I think that's one excitement. The second one, and I'll probably close on that, is just really around the impact of technology. Technology in Africa is growing at such a pace that it's driven by the problems that Africa, the countries in Africa have to solve. There's a company called MoneyPoint, which I think there's a video later around it. Some of what MoneyPoint has been able to do in Nigeria has been transformational, both from an inclusivity perspective, but also in terms of productivity, helping businesses get access to finance to allow them to grow. So I think those two key areas, I remain very excited for 2023 in terms of what I'm seeing and what my team on the ground are also experiencing.
Great. Yes, and we will be hearing from MoneyPoint later on this morning. Srini, how about from your side?
Thanks, Lynsay. The next 12 months is a very interesting period. Why do I say this? Our capital is most required in some of our markets and most of our markets that are going through macro stress and which will help stimulate and provide confidence to private sector investors to come in. Of course, in these economies have to come into terms with IMF, and our ability to invest in South Asia might continue to be impacted by macro challenges. Additionally, Southeast Asia lacks bankable opportunities, and our capital will be much more valuable to create these. And then we work with the partners around within the region to drive the climate change agenda, really. Finally, I just want to say two things. I want to say that BII is a very unique place that puts development impact in front and center of what it does, and also works with companies to raise the overall sustainability and governance standards and make them world class. Ultimately, our test is what we leave behind as a legacy in these economies where we focus and create a strong private sector. We have done that over decades. And I really want to thank our shareholders for the continued support across Asian and African geographies. On behalf of Chris, I'll say this, and particularly the high commissions and embassies through our markets in Asia and Africa, and especially Southeast Asia, where we are relatively new entrant. Thanks, Lynsay.
Brilliant. Thank you very much. Thank you, Srini and Chris, for joining us. And I think we're all hoping for greater stability and a better outlook across more of the countries we invest in during the coming years.